All right. Hey, everybody. My name's Aaron Blau, as she said. I'm the principal of the Blau Company, which is a accounting firm here in the Phoenix area. Our main office is in Tempe. I use Easy Spaces as my satellite office. I call it either my home away from home or my fortress of solitude, depending. I do live in Spectrum, which is all of across the street here, so it makes it easy to have a little bit of a home life during tax season. I get to work in Tempe, come home, have some dinner with my family, put the kids to sleep, and then I can come here and work without having to run back to Tempe or feel like I don't see my kids for days. So that's the main reason why I operate out of here. Our firm's focus is small business and entrepreneurs, small, closely held companies, pretty much just like everybody that comes here to Easy Spaces. Almost all my clients have 5 or less owners in their business. They're generally service-oriented, but we have manufacturing. We have all sorts of different types of businesses, with the one theme being that they're all small, closely held companies. We also focus on individual income taxation, which is we do about 1,300 individual income tax returns per year. I don't do them all on my own. I have a nice staff over there, which is the reason why I have to come here at times. Our focus, besides for what normal tax return preparation firms do, is we also focus on tax representation work. So if you have somebody who gets those IRS phone calls and they're actually real phone calls, if somebody gets a letter, has a collection issue, maybe they had a great year, but they invested all their cash back into the business, so they don't have cash to actually pay the income tax. That's something that we work with folks too, and getting in onto payment plans as well, and working with the IRS to satisfy their tax liabilities. So, so I've been asked to come here to talk a little bit about what it takes to prepare for tax season. I'm going to be using a format that I just started learning yesterday. Actually, I was named a CPA ambassador by the American Institute of CPAs and the Arizona Society here, and they gave us a new presentation format. So congratulations, thank you for being my guinea pigs, and I appreciate you going through this with me. So we're here today because we're talking about preparing for your taxes, and this is pretty much all the stuff before it comes to my office, or before it comes to your tax preparer's office, or before you even open up that tax preparation software that's there. And the preparation process is really a serious issue, because filing taxes is serious, right? You are signing under penalties of perjury that everything that's involved in that tax return is true, correct, and complete. The reason why you have to really take this seriously is that 4% of small businesses like yourselves get examined by the IRS every single year. So did any of you actually buy lottery tickets? Okay. So the odds of getting audited are 1,000 times more than they would be of winning the Powerball. So you spent a little bit of time, you had to wait in line, you bought your tickets, you spent some money, and now I want you to spend more time doing things that are actually more possible and more realistic. The reason why self-employed taxpayers are audited at such a high rate is that there's something that we call the tax gap in the industry. That's the difference between what people actually do pay and what they're supposed to pay. And in 2006, the IRS did a study, and they pegged that number at $450 billion, and that's on an annual basis. Small business owners, small self-employed companies, or self-employed people and their companies filing Schedule Cs made up approximately 40% of that $450 billion tax gap. And that was in the form of underpaid self-employment taxes, that's the Social Security and Medicare, and income taxes as well. So you can see, obviously, this would be a major audit priority. When or if you do get examined, I'm not going to say it's inevitable, because it is 4% every year. It may take a long time, or it may never happen. But if you do get audited, being organized, having things in proper format, in proper order, and taking it seriously assists you in major ways, because it adds credibility in the exam process. And in a more immediate fashion, if you're working with a paid tax preparer like myself, you provide me things in a clean and organized format, then you are probably going to have a lower fee than somebody who shows up with the shoebox. Okay, so a little bit of an investment in your time now can actually pay off in the immediate future and the long-term future. So what's our plan for today? Today we're going to review a few steps and discuss best practices for getting your information together so that you can have a good organized tax preparation process. The first thing is, the first question that we want to answer is, when should we really be doing this? And is anybody here a perpetual extension filer? I am. Absolutely. Okay. Greg, let me ask you. Does it matter if you file in October or you file now? You're still doing the same amount of work, right? Well, yeah, there might be some interest, there may be some penalties if you were to owe. But overall, you're going to do the same work, right? So if you had a leaky roof, if you had a flat tire, okay, would you wait to do those things? No, you know that they have to get fixed. You know you're going to have to prepare tax returns. So I'm here to encourage you to start early. By starting early, you're going to feel more relaxed. And most importantly, you're going to feel more in control. You're going to feel more in control of your finances. You're going to feel more in control because even if you do owe taxes, if you know that if you are going to owe taxes, knowing today or in the next couple weeks is better than knowing in October. Because if I know today, I have 2 months to plan. I can figure out where that money is going to come from, or I can figure out if I need to scale back on my June vacation. Okay. Also, early filing decreases your identity theft risk. Every year, it's almost exponential how much tax identity theft is going on, and it's a real mess. So if you were to do a refund and you were to be a victim of tax identity theft, but somebody's already filed a return, you may not get that refund for another year because you have to submit a claim form, you have to submit an affidavit, the IRS has to work through their research processes to see who actually, they're going to try and research who actually filed the return, who didn't file the return, what went wrong. Are you the legitimate, is your return actually the legitimate return before they ever issue you a refund? So by filing early, you vastly do decrease your identity or your tax identity theft risk.
Anybody see my identity and pay my taxes?
I actually had a client who was a doctor. That's a very good question. I had a client who was a doctor who somebody did file a return on their behalf. And this doctor makes a lot of money. And I'm going, well, the return's already filed, so maybe we should let whatever that was sit because he was going to owe a lot more when we filed the actual return. So my challenge to you in our how section or in our when section is I'm really challenging you to get this done before April 15th. Generally, small business owners, we owe. It's pretty typical, okay? But let's rip the Band-Aid off. Let's do whatever we need to do, and let's just get it done. So the next portion is who can help. And this is something that I always hit, and I feel that's very important that people know and understand. Who can actually help you do this? And I always promote using a licensed tax professional. Now, did you know in the state of Arizona, you need a license if you're going to cut hair? You need a license if you're going to sell a mortgage. What else do you need a license for? To sell real estate. Every financial industry in the state of Arizona requires a license, except for tax. So anybody can prepare taxes. Well, most people equate taxes with, or a tax preparer with being a CPA, and that just isn't the truth. Only about 42% of tax professionals who are out there and who are registered as paid tax professionals are either CPAs who are licensed by the state, attorneys, again, licensed by the state, or enrolled agents who are licensed by the Department of the Treasury. I'm an enrolled agent and a CPA. I did a 10-mile search around my Tempe zip code. There's 842 tax professionals in the Tempe area that are registered with the IRS to prepare taxes within 10 miles of 85283. There's 11 of us who are both CPAs and enrolled agents. I mean, it's a nice license to have, and I have both, and I have two sets of responsibilities, which are very similar to two different organizations, but that's how seriously I take my craft. And it's very upsetting to me when people come to me who have come from unscrupulous preparers, from people who don't take things as seriously as I do. My example for you is that here in the Gilbert area, in the past 10 years, we've had 2 bad preparers taken down by the state of Arizona. Unfortunately, both of them are back preparing taxes. Because they aren't licensed, there's nobody to strip their ability without a court injunction. And the state didn't go that far. One of the guys went to jail even. But he's back here. He operated on Gilbert Road for a bunch of years. I think he's still there, and he's back to preparing taxes again. This is a guy who did things bad enough to go to jail.
Wow.
And there's nothing that we can do about it in the practitioner community. So why is it important to use a paid professional? Because if something does go wrong, you know that there's an organization that you can go to. Okay?
So did they hold that preparer liable then for, or like?
Yeah, he did his licensed
contractor, or like tell me why it's important to do that.
So in this particular case, he had to pay some retribution. He had to pay some fines for doing his bad preparer stuff. But you still had to pay your $10,000 of tax. Now you thought he was doing great because he got you big refunds, right? So you referred your friends and you referred your family. He had a whole bunch of police officers. He had a whole bunch of educators. I had an educator come to me, and she had about 4 years worth of returns, and she owed $40,000, okay, in tax, interest, and penalties. That's a lot of money. So yes, certainly somebody could go and sue him. So there were about 27,000 returns which were audited, which equates to about 10,000 clients. Those 10,000 clients could all go and sue him and try and have recovery from that. But who's going to do that? Okay, and they would only be able to recover their penalties and interest, not the tax. Okay.
But if he was licensed, what's the difference?
If he's licensed, then they can go to the Board of Accountancy. They can go to the State Bar. They can go to the Office of Professional Responsibility. There's other means to make sure that that person doesn't continue to hurt other people.
But the penalties are so that you still pay the taxes.
Most of the time, the penalties can be waived because usually, like in these cases, they were egregious, but people still sign the return. I've reviewed this return, and it is true, correct, and complete to the best of my knowledge. Okay, and unfortunately, ignorance is not a defense against the IRS. But using a paid tax professional is. So certainly, you know, in a lot of the cases, the penalty, yeah, it did. So how do you find a paid tax professional? You can go, first of all, check with the people that you're working with. Make sure they're a CPA enrolled agent or attorney. If they're not, my father was an unenrolled preparer. My father didn't have one of these licenses. He operated for 50 years. There are good folks who are out there that aren't CPAs, enrolled agents, or attorneys. But just understand that if something goes wrong, there's nothing really that can be done. Ask if they're members of professional organizations. There's the National Association of Enrolled Agents. There's the American Institute of CPAs. There's the National Association of Tax Professionals. See, do they talk to other tax professionals? Do they attend continuing education? And what kind of continuing education? I got 8 hours of CPE yesterday from the Arizona Society of CPAs, but it was all on presentation stuff. It was on working with the media. It wasn't on tax preparation, but that counts for CPAs. CPAs do have to have a certain amount of tax annually. I do probably 50 hours of CPE each year, including presenting multiple hours as well. So ask if they present, are they active in their practitioner community. Also, the IRS now, as of last year, the IRS actually has a directory of tax preparers. So you can go there to verify if your preparer who is registered has these licenses. And it's really easy. All you have to do is Google IRS practitioner directory or preparer directory, and you'll find it in one of the items on the list. All right, so now let's kind of get a little bit more into the nitty-gritty of the how do we prepare. Well, we've covered when do we need to prepare. We've covered who can actually help us to prepare or get ready. How are we actually going to prepare? what I'm here to tell you is that using an organizer like the one that I'm giving you here can help in a real way. The organizer, if you turn to page 4, our organizer has a questionnaire. Now, this questionnaire is not meant to give your tax professional answers. It's meant to trigger us to ask more questions. So your tax professional should always be giving you some sort of questionnaire like this. And you're going to find a similar questionnaire to this in retail preparation software as well. Like, you've seen the ads, it doesn't take a genius to, did you buy a house? Yes. Well, that's great, and that ad is a little misleading, because if you answer the question, did you buy a house, there's 10 other questions that come behind that require some level of knowledge. Okay, the commercial is a bit insulting to those of us who spend our life in the industry. It's kind of like saying, well, yes, I know that I'm sick. Well, yes, but what are you sick with? Well, you go to a doctor to determine what kind of sickness you have. You certainly can prepare your own taxes. It does not take a genius, but you may have certain situations that require more in-depth knowledge. So this questionnaire helps us in delving deeper into your situation. This also makes sure that we're not really missing anything. So we're going to be asking you things like, did your marital status change? Certainly, people have come in to get their tax prepared, and they got divorced and didn't tell us, or they got married and didn't tell us. Or did you have any changes in dependents? Well, they should know if they had kids. That leads us to say, do you have the Social Security number yet? We have a situation now with a Canadian, somebody who's in Canada, and he hasn't gotten a Social Security number for his child because they're in Canada. That creates problems for us. What kind of income did you have? Did you start a business? Did you have any debts forgiven? That was a big issue a couple years ago with our home mortgage foreclosure. Did you receive a distribution from a retirement plan? Did you roll something over? That means we should be expecting to get certain forms, and we're going to talk about those forms in a couple minutes here. Miscellaneous. Do you want to allocate $3 to the presidential election campaign fund? No, I'm not going into that topic, but and most important for us as practitioners, the most important question on this entire thing is, do you have interest in or signature authority over a financial institution, a foreign bank account? Because the penalties for having foreign bank accounts and not reporting them is $10,000 per account or 50% of the account balance. So can you imagine that if somebody failed to report their foreign bank account 4 years in a row, each year they owe 50% of the balance of that account, which is more than the balance of the account. Okay, it can be pretty hefty fine. So this type of a questionnaire helps you. It helps to trigger knowing that you have additional information that may be required. It helps to trigger more questions from us in the preparation process as well. What are some good examples on how to be prepared appropriately? Well, the biggest thing is check your mail. If you have an envelope in your mail that says on the front, important tax documents enclosed, guess what? Important tax documents are probably in there. I have clients who will make a stack of those, stick them in an envelope, bring them into me, and just hand them over to me, and they haven't even opened them. That's okay with me. I mean, I don't know that you want to pay me to open your mail, but I'll do it. I would rather make sure that all that information is safe, secure, and in one place than not. What are you going to get through the mail? You're going to get anything that's a third-party reporting document. A W-2, that's what your employer paid you or was withheld on. A 1099, that's what a business-to-business, in a business-to-business transaction, they may have paid you. A 1095, this is the new form for health insurance. I'm not going to ask if anybody here has insurance through the exchange. But if you have insurance through the exchange, period, you have to have the form 1095A, otherwise we can't file your taxes. If you have insurance through a private insurer or through an employer, you're going to get either a 1095B or a 1095C. And we don't need that to file the return, but you will have to prove that you have insurance in some other form. So we're usually asking our clients to provide to bring their insurance cards.
Is that just proof at time of filing or proof that you had insurance for the whole year?
The 1095B and 1095C will say what months you were covered for.
If we had two different coverages in the year, we should see something.
You're going to get two. That's right. Because the penalty is a per month penalty. So if you didn't have insurance for, for a particular period of the year, that's okay. And then if you got insurance later, you'll have penalty for just a couple months. Okay. What do you need to track? Well, it's really important to be tracking the income you receive, because contrary to some belief, even cash is taxable. Okay. Barter is taxable if you do trade-outs. We used to do a lot of trade-outs. We don't do trade-outs anymore because I want to have that really consistent recording method. So we don't do trade-out work anymore. But barter absolutely is income. Now that barter may be income and an expense, right? If I did John's taxes and he gave me a month for free, that's fine. I'm going to record this as income, and I'm going to record that as an expense, and it's going to end up being zero. But it still needs to be recorded as income. Does that make sense? Okay. What kind of expenses do you need to track? So the Internal Revenue Code definition for what a deductible expense is a transaction that is ordinary in your line of business, necessary, meaning it's tied to the production of income. It's part of the business. You wouldn't be spending the money if you didn't have the business. And reasonable. Reasonable essentially means it can't be lavish. Got in a conversation with some tax professionals earlier this year, or earlier this week, and this person is doing taxes for a very high-end real estate agent in LA, who only sells properties over $5 million, and the commissions are huge. And there's a lot of transactions at places like Nobu and these fancy schmancy LA joints where a dinner could easily run $1,000. Well, if I'm wining and dining a client who might be able to get me a $300,000 commission, and I spend $1,000 to do that, is that lavish under the circumstance? No, it's not. If I'm a tax professional thinking I'm going to get a $400 tax preparation fee, and I take them to Nobu, is that a lavish expense under the circumstance? Absolutely. So what you have to look at in that ordinary, necessary, reasonable is, does it make sense in the grand scheme of things?
I got to call my Ferrari dealer.
Yes, it's an ordinary necessary for you to have that Ferrari, right? Return it.
I got my logo on it.
Yeah.
But if I wrap it in my logo, then
it's 100% business deductible. Yeah, unfortunately, that's not true. But I get that question so often.
Deliver food in it. Does that count?
Yes. The mileage does, 55 cents a mile. What expenses are under particular scrutiny? Well, meals and entertainment are under particular scrutiny, like what we're talking about, that lavish thing. But there's a lot of people out there, I'll pick on real estate people, it tends to be a lot of real estate people. They go out for drinks with their colleagues a lot because they like to impress and have that feeling, they of high-end, working in high-end areas. Every single time you're out with somebody who might be possibly a future referral source, or could theoretically be a client, that does not make it a deductible meal. Okay.
Drop my business card in the fishbowl.
Yeah, unfortunately not. There has to be a substantive business discussion. There has to be a substantive business activity before, during, or after. So if you go to a Gilbert Chamber event and you throw down a couple beers and you buy me one, hey, I got no problem with that. If we get done here and we all go to lunch after, and I go and buy all of you guys lunch because now you've established yourselves as potential clients because you came here to listen to me talk for 30 minutes, then that's absolutely a deductible business expense for me. You have to look in the overall scheme, okay?
Do they need documentation on that? Like what took place at that meeting? How did it transpire for you to be a client or whatever?
Right. So what the IRS is looking for is they're looking for who are you with and what the business purpose was. So if I go out with a colleague of mine, and I might have a couple watching, let me see if anybody logged in or not. I'm testing this out with a couple other speakers. No, I got nobody watching right now. Yeah. Oh. Oh, why don't I see that? I guess not. If where was my train of thought? If I go out with some other practitioners and we're talking about context and we're talking about topics and we're talking about tax issues, then certainly that's going to be a deductible meal. If we set out some sort of agenda ahead of time, if we just happen to run into each other at the bar and we just, we're going to talk about tax because what else do we have in common? I mean, we're tax people. Everything comes around tax. If it's just happenstance, that's not really going to qualify, okay? Because the purpose of meeting has to be for something that's meals and entertainment related. Do get questions about cars all the time. That's another area of enhanced scrutiny. How do we track our automobile stuff? Okay, and that automobile, the automobile stuff that's really important is the business use percentage. Now, I have clients who say to me all the time, well, I only use it for business. I go to and from the office all the time. Well, so do I, and so do millions of other employees, regular office workers. That's commuting mileage. That's not a deductible. That's not business deductible. Okay, the business mileage is essentially from your place of work to another place of work. Okay, going from your home to your first place of work, that's just commuting. Going from your last place of work to your home, that's just commuting. Everybody has to do that. But if I start my day here at Easy Spaces and I work for a few hours, and I go into Scottsdale to meet with a client, then I go to my Tempe office, then I come back to Easy Spaces, that's business miles. Now I go from Easy Spaces to home, that's no longer business miles. Now, don't tell anybody watching, but could that be one of the reasons why I like Easy Spaces as my place of business when I have a normal Tempe office? Sure.
If you're using a part of your home as an office as well,
yes.
Then
so
basically you're leaving your office to come to work here too.
As long as you start work, you actually have to be working in that office, and that the problem is proving that. So if you start, if you log in, check your work emails, sit there and do your emails for an hour or so, and then go do your things, I would say you have a case there. But your home office must be used regularly and exclusively for business. So if you don't have a space set aside in your home that's only used for business, the IRS can attack that pretty heavily. And that's really difficult for us, right? We're mobile workers. We have laptops. We have internet. I can work on the couch. I can work on the kitchen countertop. I can work anywhere in my home. But this is just one of those areas where the Internal Revenue Code has not caught up to the realist, to the times. And it's not going to. There's nobody that's out there. There's no congressman that's out there going, we need to change these rules.
Do you think that eventually, with time, that it will catch up to the mobile worker and the worker who, the freelance worker, the independent worker?
I can tell you that the IRS has changed some of their methodologies and the way they sort of view this, and it's not as big of an issue as it used to be.
Right.
They used to say, boy, it's a huge red flag, and it's not anymore. It can become an issue, but it's not something that gets brought up as commonly as it used to.
But they've taken away a lot more deductions for home offices and stuff too. So.
Well, what they've actually done is they've added a safe harbor. So you don't have to do the complicated percentage of house and putting on all the expenses and take the percentage of the house times the expenses to get a percent. You no longer have to do that. Now they have a safe harbor alternative method where they basically say $5 a square foot. This area is used regularly and exclusive. We're going to give you $5 a square foot. But it still has to be used regularly and exclusively. So that's where the mobile worker piece doesn't fit in exactly well anymore. So that's a little bit about some of the expenses that we should be tracking. How should we track it? Well, some people use Excel. Some people use QuickBooks. Some people write it out. My recommendation is if your business is making over $100,000 per year in revenue, not net, but in revenue, you really need to be using some sort of accounting software, like a QuickBooks, like Wave, like a Xero, which Wave and Xero are web apps. Wave is actually free. You need to be doing something that's another step, right? Because your business is too large. If you're making less than $100,000, you might be able to get away with Excel. If you're making less than $25,000, you might be able to do some handwritten stuff. But our office, we want you to, everything about this is about preparing, right? It's about putting things in the proper order to save fees in preparation, to save fees in tax representation, to save penalties in tax if you get examined. Having a good double entry accounting system like QuickBooks is really an imperative to all three of those areas. Okay.
So what are you wanting me to track? Is it like a scan of a receipt? Is it just like is a digital copy of a receipt valid?
So what
I know that goes back to kind of like dark ages.
Yeah. What I want as a tax professional is a clean QuickBooks copy where bank accounts are reconciled. That means that everything in the system is showing up on your bank statements, and if there's something in the system that's not on a bank statement, we know why. I'm not an auditor, so I'm not looking to examine actual receipts. In fact, I don't want to see them at all, because if I do, that generally means you're getting audited. What I do want to make sure is that you understand the concepts of ordinary, necessary, and reasonable so that you know what to track in those software programs. QuickBooks, the newer versions of QuickBooks, including QuickBooks Online, has a great tool if you are paperless oriented, and a lot of people in this office absolutely are. You can take that scan or that email or whatever that document is, and you can actually, when you type in the transaction into QuickBooks, you can attach that PDF into the QuickBooks file, and now you're essentially audit-proofing yourself. Because if you do get examined and the examiner says, I need to see these receipts, you double-click on the transaction, you click the attach tag, you hit print, and you say, here. It's no longer having to go through a file that's, a bunch of receipts by month or by vendor or any of that information. It can all be digitized within the QuickBooks copy. So I do have a QuickBooks seminar that I do give for SCORE as well as the Better Business Bureau, and we do talk about that a little bit more, or we can do something offline as well. Okay. So the plan that I'm recommending for you in regards to what to track is to pull out your 2014 tax return, see what's on it. If there's something on that 14 tax return, make sure you have a document for it for 2015, or you know why. I have some clients who have gone from being a W-2 to being a small business owner. Well, we know there was a W-2 income over here. We know why there's no going to be W-2 income in the new year. If there are expense items on your Schedule C, postage, etc., those are going to be the things that you probably should start getting together and have a good idea of. And you can compare your 14 return to the portions of this organizer and make sure that there are lines that are associated with each. So I'm going to conclude by basically saying, if you invest your time early and use a qualified tax professional, preparing your taxes is going to be a lot less stressful. Accounting is more than counting. Okay, people say, you must be great at math as an accountant. No, I'm great at using computers that are good at math. Okay, counting is more than just counting. Counting is actually about holding yourself accountable. It's holding yourself accountable to your goals. It's holding yourself accountable to your family, to your community, to your government, unfortunately, sometimes. Accounting is an imperative part of your business because it tells you where you've been, and without knowing where you've been, how do you know where you're going to go? My goals for my clients is that when they leave my office, they feel lighter. When they walk in, they have the stress of preparation, they have the stress of IRS issues, they have the stress of accounting that's weighing them down. My goal for them is when they walk in, I'm going to take that throw it on my shoulders. I'm a short guy already. It's not going to push me any lower to the ground. And when they walk out, that they're taller and they're less stressed and they feel better. I get so many comments of, boy, coming to see you is like seeing the dentist. Oh, it kills me. Just kills me. But if they walk in feeling one way and they walk out another feeling better, then I did my job properly. So tonight, this weekend, sometime before April 15th, spend some time, April 18th of this year, fill out your organizer. If you need help, contact our office. You can go on our website. You can drop me an email. You can request an appointment right on our website, and we're going to hopefully be able to help you relieve some of that stress of tax preparation. Who has the first question?
I do, actually. Is it, since you specialize in small business tax preparation, is it a good idea for small business owners to do their own taxes? And if so, what are some key things that they should remember when preparing this tax?
For small business owners that are doing things like MLM-related issues, or if they're doing things that are they're almost kind of hobby-oriented, but they do make money, those are some folks that certainly can probably do their own taxes without doing tremendous amounts of harm to themselves. Once you get to a certain area, I got to tell you, I don't mow my lawn. I can't change I can probably change a tire, but I don't change my oil. There's certain things that I don't find value in putting my time into. Certainly, there are tax preparation for small business owners might be one of those things. You might spend 50 hours doing something that would take me 4. So you have to look and see what that value proposition is for you. Is it frustrating to you? Is it causing too much stress on you? Well, a tax professional can provide a little bit of relief. But if you're doing it on your own, make sure that you feel comfortable with it, because if you don't, then you need to go to a paid preparer. You need to feel that you have a sufficient knowledge of the ordinary, necessary, reasonable, and what you're supposed to be tracking. Okay? Because if you don't, you're going to be expensing way too much. There's nobody to bounce things off of when you're doing it on your own. And we find that people can sometimes be a little extra generous with themselves if they don't have somebody to keep them somewhat in check. So if you're somebody who can keep yourself in check, then that's something that you can absolutely do on your own.
If you're seeing a big difference in your itemizations, like from one year to the next, let's say, for instance, one year you had very low entertainment and travel meals, and then the next year when it spiked really high. Do they look at things and track it from year to year? Are they wanting to see more of a kind of an even status across the board for the business?
So the IRS has a methodology for choosing tax returns to be examined, and that absolutely is one of them. They look for the spikes. The example I give is I had somebody who came to me for representation help, and he got audited for his charitable contributions. And he, for many years, basically said, "Oh, my wife goes to church every week, and every week she puts $50 in the kitty." Well, one year he added a zero and put $260,000, or he put $26,000 instead of $2,600 into the form, and he got audited primarily because of that spike. From a business standpoint, that only makes sense for them to be able to look at those issues, especially in areas like travel, in areas of meals and entertainment, in areas of automobile, where people tend to be, again, more generous with themselves. Yeah, don't add a zero. That's right. Yeah.
So what is the advantage of someone like myself or anybody in here doing quarterly estimated returns versus doing everything at the end? And figuring it all out and doing it in April?
So that's a great question. So there is a function within the tax code that requires folks to pay in their taxes as they go. And you do that using Form 1040-ES, which pays in quarterly estimated tax payments. So just like an employee, a little bit comes out of their paycheck each month, a small business owner is supposed to make 4 payments in April, June, September, and January. And these payments can be based off of your actual estimated tax, or they can be made in a safe harbor kind of format where they're 4 even payments that are based on the prior year. If you don't make the quarterly payments, you're going to pay a small penalty, and it's a kind of a complicated transaction, but it's about 2.5% of the amount that you were supposed to pay in but didn't. For some of my clients, that's perfectly fine. They'd rather have the liquidity. They'd rather have that money because maybe they are those realtors where their funds are up and down. For other of my clients, they are so scared of anything that's called a penalty. They don't care about that time value of money sort of situation where money in my hand is more valuable than money in other people's hands. So as long as you go into it knowing there's a small penalty that's going to be involved, then I don't have a problem with clients that do it either way. But a lot of it really does come to self-discipline. The reason why this is required for small business owners to pay in over time is why? Going back to the presentation, right? A huge chunk, 42% or so of that tax gap is related to people who underpay their taxes. So they're promoting compliance through trying to get you guys to pay money up front. Or it's not even up front, it's as you go. Good. Anything else? Well, thank you guys very much. I appreciate it. Thank you for being my guinea pigs in the new presentation format and trying Google Hangouts Live. Appreciate you very much.
So we'll let you guys know next week I'm going to be doing one of these on